Hello, crypto family. I hope you guys are doing well. This is the part two of my Polkadot series. If you haven't watched the part one, the link is on the right hand side where you can click, and it will take you to the primer. The primer basically showcases the Polkadot's architecture and tokenomics, and this series is basically a discussion around my own investment thesis. I also do valuation exercise and also do some price prediction based on technical analysis. Uh, a quick plugin. This channel is all about fact-oriented altcoin research and investment ideas, and this is a no hype, mission focused channel. And also another disclaimer, I'm not an investment advisor and this is not investment advice, and I also have some Polkadot in my portfolio. The way I see dot investment is that first, it can act as a ETH 2.0 hedge or a put option. So what I'm trying to say is either if ETH fails, ETH 2.0 fails, then Polkadot can be used as a protective mechanism for your portfolio. And the second part is, let's say if ETH loses market share, where some of the projects and developers share because of competition increasing within the layer 1 and layer 0 space, then ETH can lose market share and Polkadot can be regarded as one of those competitors which are well capitalized to capture that market share. So if you look at the design level, ETH 2.0 and Polkadot are quite similar, even though there are certain differences. But let's say when we are talking about ETH's beacon chain, which kind of coordinates among different shards and provides security to all the shards, right? So relay chain is the beacon chain equivalent in Polkadot. So while Ethereum shift to the new structure is like a pivot away from proof of work, Polkadot already has delegated proof of stake, and they also had that aim design goal since the beginning, and probably they are far ahead against Ethereum when it comes to proof of stake implementation. So my opinion is, among all the projects available out there, if there is a delay in Ethereum 2.0 roadmap, you have a Polkadot ready to capitalize and take away some of the share, since they have very strong developer community, and there are also a lot of projects showing interest now to develop within the Polkadot ecosystem. The second thesis is Polkadot is highly scalable. So now just talking about the network, Gavin would believes that the network has the capability to kind of handle 1 million transaction per second. And just if we compare to current state of Ethereum, the network can only handle between 13 to 15 transaction per second, and Visa can only handle about 4,000 transaction per second. So it's a very highly so when the network is up and running, it will be highly scalable. So that's the second point when it comes to my investment thesis. The third point is Polkadot, in my opinion, provides the broadest type of interoperability. So you can think of it having multiple blockchains, and within those multiple blockchains, you have protocols built on top of it, and the chains can communicate with each other, and all the protocols built on top of that will be able to communicate with each other, transfer data, transfer assets, transfer messages. And not only that, then you also have a system of bridges where the hub will be connected, the Polkadot hub will be connected to, let's say, Ethereum, Kusama, and Bitcoin. So if we kind of imagine the blockchain world to be multi-chain, Polkadot is a very good bet with regards to that. Now, my fourth point for my investment thesis is that I think Polkadot is quite developer friendly and it's highly customizable. So their framework substrate makes it easier for developers to create custom blockchain for bespoke products. So let's say for NFT, you can create, the developer can just do a pick and drop Same with gaming, same with DeFi, same with privacy coins. And when developers find it easy, then there is a unique network effect going in, and there is a flywheel effect. Since a lot of developers, if they migrate to Polkadot, they'll be able to create amazing projects or build on top of some of the blockchains that are already created. And then you have this amazing network effect, since the bespoke solutions is something what customer desires. Now, the fifth point of my investment thesis is the Polkadot on-chain governance, which I think at the moment is widely underappreciated by the markets. I think the idea that council makes decision for passive investors who do not have that much dot, or perhaps they're not that much engaged within the community or the governance structure, I think it's quite unique. And I was hearing Gavin Book talk about it, that this can be one point of centralization, but they're also working towards that. So on-chain governance and how that evolves is something which I'm also tracking, and I think it's a fairly neat idea. And I think not a lot of investors appreciate that and appreciate the tremendous benefit and network effect that can bring in. The final investment thesis point is that Polkadot provides you an alternative real life testnet called Kusama, where developers can test their wildest ideas before that project gets launched on Polkadot. So in essence, that makes Polkadot very safe, and the experimental development environment for the teams that want to prepare for the deployment on Polkadot and also flag some error, I think is an amazing idea. And so they can optimize some of their product launches before it's launched on Polkadot. So all in all, this makes Polkadot very secure. So you have a testnet, and then on top of that, you have like a experimental testnet, which kind of allows developers to see how they can how the protocol acts in real time. And then once they have flagged issues, experimented with different ideas, then they can launch on Polkadot. So if you look at Polkadot in terms of security and in terms of risk reward, I think if you have all of these major concerns fulfilled, then Polkadot is also a safer investment when it comes to other layer 1 and other layer 0 solutions. So in my mind, the moat and the unique value proposition of Polkadot is the fact that it has through cross-chain message passing protocol, the Polkadot has the network has the capability to make parachains talk to each other. So now when you think about it, when you have 100 parachains, and those 100 parachains will be a blockchain of its own, and those blockchain which have protocols built on top of it, if they can talk to each other, this is very powerful. So a few months back, Akala Network and Hydra DX, which are the two leading Polkadot DeFi projects, announced that they were able to use the cross-chain message passing XCMP protocol on the testnet to complete a token transfer between the two blockchain. And for me, this is this can become their moat, and this will be their unique value proposition, which other blockchains are not offering. Apart from that, I think one big optionality with Polkadot is right now we have 100 Parachain auctions, but given the quality of the developers and given Hood's ability, I won't be surprised once the Polkadot is up and running that Parachains can scale to 200, maybe even more. And if that happens, there will be a lot of value accruing within the Polkadot token and the network. And for me, that's one of the optionality which is also underappreciated by the market at the current moment. Okay, so the investment making thesis makes sense, but one question every investor should ask is whether I'm getting a good project at a fair value or at a fair price. And so these are some of the frameworks that I'm going to share with you that I use with my own investment decision. So at the current price, DOT is $19 and it has around 90 to 20 billion market cap. So the market, if we assume the Ethereum price is $2,700, It is fluctuating, but I think 2,700 is likely to be the higher end of the range where the market is at currently, right? So at current dot price of $19, market is assuming that Polkadot will be capturing 6% of Ethereum's market share. My perception is, given how the team looks like, how the community is, and the problem that they're trying to tackle, especially the problem of interoperability, I think if they succeed in what they're promising, I believe it's an easy shout to say that Polkadot can capture around 25 to 30% of the market share of Ethereum. So if they capture 25 to 30% market share of Ethereum, then the dot fair value should be between $73 to $88. And that gives you a ROI of 250% to 322%. Now, there's also a bull case where, let's say, Polkadot has the capability to have high degree of interoperability, and let's say instead of just having 100 parachains, it captures and has the ability to have more than 200 parachains. Not only that, the Ethereum 2.0 also fails and also is unable to sustain its market share. And in that case, one can expect that Polkadot can capture about 50 to 60% of Ethereum's market share. So in that case, the Polkadot's fair value should range between $147 to $176. That gives you a 6 to 7 times, it becomes a 6 to 7 bagger. Now, I believe my base case and bull case is not that extremely bullish. If you see the recent 30 days of developer activity, and you also see the quality of the comments and the quality of the developers involved with the Polkadot projects, firstly, Polkadot has far exceeded in last couple of days, last couple of months, in terms of the activity. So the sentiment.net uses good quality development activity rather than just commits, which also happen because of forks. So these are high quality activity, and it has by far, like by a margin of 2x, exceeded Ethereum. So the activity is very high both on the Polkadot space as well as on Kusama, which is kind of like their real version testnet, and it's also gaining much more traction against Cardano. So if the quality of developers are very good and the development activities is very high, that means the project's community is very serious about making sure that the project delivers, then there is a huge network effect, and we can see how that network effect sweeps into Ethereum and captures its market share. So the base case and bull case, in my opinion, is not overly optimistic. So based on the current market prices, as of today, Ethereum was around $2,600 and Cardano was $130. So based on the fully diluted market cap, where does DOT stands? It is still much cheaper than Ethereum. It's far cheaper by a margin of 3x than Cardano. It's at the same price valuation of Solana, but it's slightly more expensive when you compare to Luna and Atom. But when you say Luna, Terra ecosystem and Atom, both have issues regarding tokenomics. So their tokenomics and value accrual system is not as good as Polkadot. Luna's token value accrual mechanism is far better than Atom's, and Atom Cosmos is basically working on improving that. But if you compare to Solana, which is layer 1, and DOT, which promises to be a layer 0 and connects all of the ecosystem together, it should, in my opinion, have the second highest market cap rather than being in the middle of the range. And even Binance Smart Chain, which is not technically a layer 1, but it does has a smart chain, but it's more like a utility token, also has a far higher market cap. So in terms of kind of saying that the Polkadot is a bargain right now, it's safe to say it is if you compare it to some of the other competitors present within the space. So over here, what I've tried to done is I've tried to kind of mimic how does the DOT price gets impacted in a scenario where there are different parachain auctions going on. So first we assume that the DOT price is $19, and that gives us a around market cap of Polkadot to be around $20 billion. Now over here I assume that, let's say, if there is $1 required for the parachain, so let's say if the projects, if they bond Polkadot, $1 worth of Polkadot will have a market impact of $4. So that's, in this case, is known as the market cap multiplier in my model. And since there will be a network effect involved, as the parachain from one year to another year, the whole ecosystem grows, the demand for parachains will grow. And once the parachain demand goes up and the scarcity of Polkadot, since a lot of Polkadot will be bonded and staked, it will become scarce. So every year in my base case, we also have an increment in that multiplier by 25%. In my model, I've assumed that the average Parachain auction will cost the project 40 million. So they will require 40 million worth of Polkadot, which is at the moment is 19 million. So 2 million, around 2.2 million Polkadot will be bonded in order to lease the Parachain. I also imagine the cost of this Parachain lease to go up every year by 20%. And in my model, I assume that the Parachain auction for Polkadot, instead of happening at the late 2021, it will start happening from 2022 onwards. And per year, there will be 20 Parachain auctions. So 100 Parachain auction slots will be, let's say, distributed in 5 years. Some of them will also be a common good. So not every Parachain will be auctioned, but I've not kind of built that assumption within my model. I'm also assuming there is some optionality involved, where, let's say, instead of just having 100 parachains, we might have a case where there might be 120, 130 parachains eventually in few years time. Then what I've done is that how much yearly impact does these parachain auctions have each year based on these assumptions on a yearly basis on Polkadot's market cap. So over here, you have an impact of 3.2 billion, 4.8 billion, 7.2 billion, 10.8 billion, and 16.2 billion in matter of next 5 years. And I've discounted that in terms of calculating the net present value of that future impact in today's time. So I get the net present value of those bonded scarcity element created by the auctions to be of $25.4 billion. So the impact on the price will be 130%. So just through, if you try to calculate the net present value of the auctions, and assuming right now the market does not efficiently priced in the auction of these parachains, we can expect the price of Polkadot to go up by 127%. Now obviously my assumptions can be wrong, so I've created like a scenario table which is quite sensitive to some of my assumptions. So let's say if I, instead of having my base case of having a market cap multiplier of 4, I may have a multiplier of 2. And in the case of a bull run, because the ecosystem is flourishing and everybody wants a piece of dot, the market cap multiplier could be 6 because there's a lot of scarcity involved. In the bull case, ecosystem grows significantly and there's a network effect going on. So the cost increment of the Parachain auction can, instead of being 20%, can also be 30%, and in a bear case can be 10%. And based on this assumption, Polkadot should appreciate between 27% to 380%. Now, in terms of doing a net present value calculation, in my base case, I've assumed a discount rate of 15%, which is 50% higher, 50 to 60% higher than equity. And in my bear case, I've even used a higher discount rate, and this is to encounter more risk if the bear case scenario plays out. So all in all, I'm very confident about my model, and it also gives me a framework to think about the Parachain auctions. So if you think the market is not discounting the Parachain auction price impact on DOT, this model shows to me that the scarcity element could create a upside for DOT between 27% to 380%. So at the moment, the total market cap, depending on the volatility, is between $1.6 to $1.7 trillion for the whole crypto market space. Now, if we look at the fully diluted valuation of DOT, assuming the price is about $18.519, the market kind of believes that DOT will capture $1.5 0.25% of the whole crypto market space. Now, assuming the quality of the team, the quality of the community, and the development activity pick up, and the power of interoperability, where kind of this ecosystem which connects the whole blockchain space together, I wouldn't be surprised, and I feel like it can definitely capture more than 3% of the total market share, at least. So in a scenario where, in my base case, if we have 3.25% to 4.5%, and let's say at the end of 2020, or maybe at the end of at the middle of 2021, the whole crypto market space, instead of being 1.7 trillion dollar, is instead between 3 to 4 trillion dollar. And then you have a fair value of Polkadot to be around $90 to $165. Now, just to take the conservative assumption and just to take the middle ground, if we assume that in next 12 months, if the market cap of the whole crypto space is 3.5 trillion, that's 104 to $144 per dot price. So even if we say $3.5 market cap, that's just 3.5% of the total equity space, and about 1.2% of the whole global asset space. So in terms of crypto going to $3 trillion to 3.5 trillion is not a big assumption. And not only that, even if the crypto market space goes to 10 to 15 trillion, even in that case is not a big task, in my opinion. Now, if you look at the market sizing of Polkadot relative to global equity, at the moment, the global equity is around 90 trillion. And let's say the range, if there is a correction by next year, and this range remains constant between 85 to 95 trillion, and Polkadot in 1 year's time is able to capture 0.5%, which is slightly bullish, but let's say 0.5% within the next couple of years, then you have a Polkadot price of $390 to $435. So based on some of the metrics I've discussed, market dominance, relative valuation, the catalyst of the auctions, and now market sizing relative to the global equity space and the global tech space, Polkadot is indeed very cheap given some of the promises it's trying to fulfill. So the counter argument is that, okay, Polkadot, in fact, it's not that cheap. Actually, it's relatively more expensive if you compare the valuation with some of the network effect that Ethereum has or Cardano has. And we might be in a situation, rather than being in a multi-chain world, we might be in a situation where, let's say, one layer one is so composable, there is such a high composability that it captures all the market share. So what I've tried to done is I've also tried to calculate the network effect per dollar amount of market cap and try to see if Polkadot is indeed expensive on that metric. So first exercise was to kind of see how many Twitter followers it has, and this Twitter followers kind of act as a proxy for network effect. So Ethereum has about 1.5 million Twitter followers. ADA has around similar to DOT, about 500,000, and Solana has around 340,000 followers on Twitter. So now the next exercise is that I divide the Twitter followers by the market cap to kind of see what's the dollar value of one of the network effect. So over here, if you kind of see the dollar value per follower, actually Polkadot amongst all the competitors considered is relatively cheap. So if you consider Ethereum, this is the most expensive one. Luna comes second, Cardano comes third, Solana comes fourth, and Polkadot comes fifth. Cosmos is the cheapest, and Cosmos is also layer 2, but Cosmos Atom has few issues regarding the tokenomics and value accrual system. And once that issue is solved, then only I believe Atom becomes a very viable investment. But that being said, Polkadot within that metrics relative to some of the competitor is cheap as well. So even if you're investing, nothing is perfect in this world. There are always some risks that you have to take into account. Uh, so there are a few risks to my investment thesis. That could mean that instead of capturing Ethereum shares of around 30% or maybe 50%, Polkadot might fail and only capture like a couple of percentage points of Ethereum. And instead of going up, then we have a negative pressure on the prices, like downward pressure on the prices. So the first and foremost, very common risk I see with Polkadot is the supply schedule. I think is very aggressive, especially with regards to the inflation. And the inflation rate at the moment is 10%, and it's dynamic and very difficult to kind of project how many newly minted dots will end up in circulation. So if the supply increases, there is a downward pressure on the prices. Another thing is, which is a very commonsensical point, is that it's also competing for developers and users with other platform, with other smart contract platform. Polkadot doesn't have a smart contract platform ability, so they're competing with Ethereum, Solana, and potentially in the future Cardano. So everybody is trying to compete for same user base and same developer pool. And so if there's a delay in the project, and let's say Cardano launches or Solana, which is already launched, and Ethereum grows and achieves a huge network effects, then it will be very difficult to attract the similar user base, or perhaps incentivize the similar developer pool to kind of such network. Another point which I think is one has to be cautious of is the developers have to wait for the parachains to be built, and then they can only launch the application. So they also have the incentive to perhaps launch on other chains and not wait and not be patient, and this could also create issues for Polkadot. There are also regulatory risks. Ethereum doesn't have that because they have kind of shown the world that they're very decentralized. But their fundraising initially, when they were trying to fundraise, they had the name of their current crowdfunding mechanism as initial Parachain offering, which is very similar to IPOs. Now they changed their name to crowd loans. So there is a risk that you have a Ripple-like lawsuit by SEC, and they will try to like kind of categorize Polkadot as a security token, and that could create issues for investors who wants to invest in Polkadot. Another interesting philosophical point is that there could be an ability of all the parachain listed on Polkadot. So let's say you have 100 chains. Those 100 chains might in aggregate have more value than the whole Polkadot, which just provides shared value security, right? So that could be can be an attack vector for Polkadot, where there will be an incentive for malicious attacker to kind of launch an attack, since the ecosystem's aggregate value is much more than the security provided by Polkachain. But then I think it's a very minute point, because at the moment more than 65% of Polkadot is staked, so it will be very difficult to acquire, especially with bonding and staking, to acquire more than 51% of Polkadot to kind of launch an attack. And even if they do, they will have to acquire, even at current stage, more than 10 billion. So that is something to keep in mind. Also, like few projects like Reef Finance, they have also launched their tokens on Ethereum, right? And they have launched their ERC20 tokens, and this is because Polkadot isn't functional. So if there is any delay in Polkadot, you have other chains who will capitalize, right? And since Polkadot is also using bridges to connect to other blockchain, there could be like a free rider problem, where it might be cheaper for developer to build on other chains and then try to gain users through the bridge, and basically service their DApp on some of the Polkadot's parachain. So it could create issues regarding populating the ecosystem going forward, where it's easier for a developer to launch on Ethereum. Final point, and I think it's a very interesting point, is that you have a lease model which ranges from 6 months to 2 years. But let's say these parachains are for legitimate infrastructure projects, right? Like you have your DeFi projects, and you have your DEXs built on, and then there will be projects that will be built on top of them, right? So those projects will be worried about getting built on top of these blockchains, since you have like a 6 months to 2 years time limit, right? and that's another safety concern, and that's also another security concern. So it might be costly for projects to be built on top of some of the blockchains that are being auctioned via parachains. So this could cause some of the projects not to be built on parachains, but rather, let's say, on a smart contract platform like Ethereum. So if those scenario plays out, then you can perhaps not have higher market share capture of Ethereum and maybe around 2% or 4%. And in this case, your drawdown is 40 to 70%. But if your upside is 4x, 5x, maybe 10x, and you only have a drawdown of 40-50%, then the risk reward is still asymmetric to the upside, and thus Polkadot makes sense in terms of being a good investment. So now we kind of use some of the technical analysis tools to kind of predict prices and see if those prices kind of matches some of the valuation metrics we have acquired. So let's say if the Polkadot, you can see it, the price being trending within a trend channel, and let's say if at the end of 2020 or 2022, the price kind of retests the bottom end of the trend channel. So in this case, we have a target price of around $21, which is not far from what we have at the moment. But let's say if the if the price talk basically the price action challenges the mid trend line resistance or the mid trend line of the channel. In this case, we have a price target of between $48 to $52. And this is also the all-time high and the resistance level we saw around around March to May time as well. So it could be interesting that this price target in near term can be hit, because prices kind of does a mean reversion, and it can go back to its all-time high to test that price action. So let's say instead of that scenario, let's say we kind of enter a range bounded market, and in that scenario we can expect a price around $28, which is the around the midpoint of the mid trend line resistance line and the bottom end of the trend channel. And this is also the mid trend line resistance back in May, and will also act as a resistance here. So this is also one of the price target we can see at the end of 2022. All in all, if we resume in a bull market, then it is a possibility that we might go a bit parabolic and kind of test the upper end of the trend channel. And in this case, it won't be surprising by the end of 2022, we have around more than $90 price for Polkadot. Over here, I've done some GAN analysis to also kind of show you, let's say if we kind of use angular approach and have different trend lines depending on the angles provided by GAN, which has roots in astrology, we can kind of expect the price if the price followed this trend line and it's at the bottom end of this angle, this trend line angle, the price could be around $48 to $50. But let's say if the prices are around the middle of this angle, then you have price around $72, and then you also have a GAN resistance level at 84. So the Polkadot can definitely test this resistance level. So this GAN resistance levels comes from the angle from its all-time high. So this can kind of provide as a resistance. So I can expect by the end of 2022, this is also a possibility, and basically testing this trend line again could also be a possibility. Also, one thing to note, that we also have a resistance here around $23-24 mark, and if it breaks that, it will be easier for the price action to go and have upside. Apart from that, I've also kind of used some of the principles from Elliot wave theory to kind of show you what price action we can expect. So let's say if you use Fibonacci retracement to kind of mimic some of the waves, we can assume that, okay, at the initial in September we were in the wave 1, then wave 2, then wave 3, and then correction happened, wave 4, and now we are on a path towards a towards the start of wave 4. So let's say the wave 4 will be bullish and we can see the price go up. And if the prices go up, it won't be surprising to kind of test the all-time high, which is 52, $53, and even go up ahead of that before correcting again in the fifth wave. In conclusion, I do really like Polkadot. So now the price is around $19. If you do want to accumulate DOT, one could accumulate DOT at a breakout of $20, and if it retests the some of the previous price points, I think accumulation below 15 and then heavy accumulation below $12 could be a sound strategy. I believe there are a few risks involved with the project, but the risk reward is to the upside, and the risk reward is asymmetric, and hence it's also a big part of my portfolio. After Ethereum, Polkadot is the second biggest position in my portfolio. Again, do your own research. This is not an investment advice. And I hope you liked my valuation exercises and some of my pointers for my investment thesis. And if you did like it, and if you want to see the part 3 of my series, do comment below and hit subscribe and like this video, so the YouTube algo knows what Seeking Crypto is trying to do and who Mehdi Farouk is, so I can keep on producing content like this.